Hello traders, this is Dave with the Compass Options Trading Room Text Alert Service. And tonight I'm going to put together a webinar video on trading, intraday trading the SPY, the Qs, the IWM, Russell 2000. And I'm going to kind of go over the criteria and the structure of those trades, how best to trade them. They're intraday trades, most of them are fairly quick. Again, I can call them out of the room. There's no way I have time to post them or alert on them. But a lot of people have asked me about doing something like this because you can learn them yourself and trade them during the day, and they're a nice little addition to the high probability trades we take that are short-term swing trades and longer-term day trades. These are going to be generally fairly quick trades. But it can generate some nice results. So let's get started. All right, first thing I have to do is, well, this is what's called the super system intraday trading is what I call it. So the first I have to do the disclaimer, and then we'll get going. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose, and neither myself or Right Line Trading are licensed financial advisors. So we won't be giving financial advice. Okay, and this is just kind of in case people aren't familiar with the alert service, this is what it looks like. It comes on your phone. And I'm going to just cover the basic rules we trade by in the room. It kind of applies to the SPY super system as well. We trade the best and skip the rest. This is true. What we're going to be talking about here is trading the indexes, but we're going to trade the best index during the day. And our objective obviously is not to make trades, our objective is to make money. This tells us to focus in on only the best trades and bypass the rest of them. Because a lot of times when you're trading the SPYs, the Qs, the IWM, it's going to be you're going to be waiting a lot during the day. There's going to be a lot of them that just don't set up. They only set up occasionally, and you need to be prepared for those and knowing what to look for. All right, so we need an edge. Profitable traders need an edge. This I show all the time, but our edges are, we have the Right Line Compass system, which is critical to knowing what the institutions are doing, which is critical to know how to trade the IWM, the SPYs, the Qs, the indexes. It's critical. We trade relative strength and relative weakness. Now, with the indexes, we don't have relative strength per se like we do with trade stocks. When we're trading stocks or options on stocks, we can compare how that stock is performing versus the S&P 500 or the SPY. What we're going to be looking for here is we're going to play relative strength and relative weakness. Which index has got the best relative strength? Which index has got the best relative weakness? And select, that's the one we want to follow. That's the one we want to trade that particular day. Trading with the market trend, of course, if the market is going up, we'll look to go long. If it's going down, we'll look to go short. And buyer support, seller's resistance is always what we'll be doing. We'll absolutely be doing that with the intraday trades on the SPYs, Qs, and IWM. All right, so the topics I'm going to cover, these are just indicators, finding relative strength and weakness. Technical charts tell a story. I'm going to skip past this. This I've had before. Algos take money from retail traders. This is also important, but this is not really critical to what we're going to be talking to tonight. This I always show so that just everybody understands that we as retail traders, we're these little marbles here, and we can't move the market. The market's moved by the institutions. Here's the institutions right here, big investment banks and their algos, hedge funds, pension funds, and mutual funds. That's where all this money comes from. And this is what drives the market, and we've got to know when they're in the trade and when they're not, and that's very important for us. And this applies to the indexes as much as it does to trading stocks and options. All right, so again, algos have taken over the market. Let's join them. This is what we're doing here when we're trading high probability trades, and it's also what we're doing when we're trading the indexes. The algos trade the indexes the same as we can. So we're going to do that. And how the algos take money from retail traders, it's pretty simple. They basically understand what retail traders trade, MACD crossovers, RSI changes, stuff that we in the room don't follow. We follow the institutions. Most retail traders have no idea how to determine if the institutions are in a trade or not. They don't even have any clue about trading relative strength, relative weakness. So understand that trading indexes is more difficult than trading stocks. because they tend to be a lot quicker trades, and you don't really have real relative strength and relative weakness. You're just selecting the one that's the strongest or the weakest of the particular index. All right, and again, the compass system, for anybody who's not familiar with it, it identifies high probability trade setups while sidestepping stock setups that look good and fail more often they succeed. This is also true on the indexes, which we'll get to, and I'll show you some charts on that. Again, we identify when institutions are driving the move and when they're not, and the compass system does this with colors. Most everybody here that's listening to this should be familiar with the compass system and the colors that the system produces for bullish and bearish institutional trades. All right, so the indicators used for what I'm calling the SPY super system. Now, it's the SPY super system, but it also applies to the Qs and the IWM. It's basically an index super system. We're going to be trading the SPYs, the Qs, and the IWM. Those are the three major indexes. I mean, there's others, and you can trade them. You can follow them the same way, but these are the major ones, and these are the major ones that the institutions trade. Another thing we're going to be looking on at that's critical is the current time frame momentum. We're going to be looking for color changes in the current time frame momentum. That's the one of the indexes or one of the indicators on the compass system. We're also going to be looking at the VWAP. This is really at a very important support resistance level. We're going to be doing these trades as the index bounces off the VWAP or goes through the VWAP up or goes through the VWAP down. This is really critical. That's one of the things we'll use a lot. Now, it isn't the only one. We also can use the 15 EMA as support and resistance. It can also be used for entries. But VWAP is really a good one. It tends to be the one that has the best success rate of trading when the price is going through the VWAP to the upside, or going through the VWAP to the downside, or coming to the VWAP and bouncing off of it. In other words, it becomes a strong support resistance level. But same thing applies to the 15 EMA. If a stock has been going up and it pulls back and it doesn't go down to the VWAP, but it goes to the 15 EMA and bounces off of that, you can also enter trades off of that as a support resistance level. And the other thing to be aware of is the pivot point, the white line. That's the pivot point on the chart. It's another support resistance level, and it's basically more important when you're in a trade not to be too close to the pivot point. I tend to use it more as a resistance level when it's going up, or support level when it's going down. And if the index we're trading is very close to one of these pivot points, I won't take it because there isn't enough room to the upside or the downside to justify the trade. So that's one we'll be also looking at. Okay. Now, one of the things I want to clear up with a lot of people don't know what they know what they call momentum, but they don't really understand what momentum really is. And momentum is critical to determining if the institution is in a trade. We've got to have momentum as one of the indicators we're going to be looking at here, the current time frame momentum, very critical. Many traders misunderstand what constitutes momentum. So what is it really? All right, so momentum is not like if you're in a car and you step on the gas and it accelerates, you think of that as momentum. But that's not how we measure momentum in the market. Momentum is measured by, this is a momentum up to the upside right here. These are candlesticks, and this blue line is the close of that particular candle. So on this particular candle, we opened here, we went as high as here, we closed here. Next candlestick, we opened here, we went as high as here, we closed here. What you have to understand is the momentum is determined by if the close of the candle is getting closer and closer to the high of the candle, just like that, which means is the closing price is closer to the high as we move forward. And we're looking at this in a current time frame momentum. This is what indicates that there's momentum in that particular stock. And this is caused by institutions buying, and driving it up. And it gets really close to the very high. It could keep on going, of course, but this is what acceleration, this is upside momentum, a bullish momentum. This is bearish momentum, acceleration or deceleration to the downside. We get a open here, a close here, and this is where an open here, a low here, that's a high. This is where it closed. Now we've got it opens here, goes as low as this and closes here. So you notice the close of each candle gets closer and closer to the low of the candlesticks as the candles come down. That is momentum. So in other words, if this was here and this one was up higher and then this was up higher again, that's not momentum. You're not actually getting momentum. Now you're getting red candles. The price is going down, but it does not have momentum to the downside. So that's really important. Now you're not going to necessarily see this on your chart, but be aware of the fact that the current time frame momentum, when it switches, for example, when it switches from red to blue or red to green, this is what it's identifying. This momentum to the upside. The momentum is now gone from neutral or bearish to bullish, and this is what it's measuring right here. All right, so that's really important to understand that this is what the momentum is telling us. So just so you know what momentum really is, I think it's really misunderstood that just because a stock price is moving up, green candle after green candle, that doesn't necessarily mean that it has momentum. Okay. So the SPY super system criteria, and I'm going to show some charts here when I get through this, but I want everybody to understand what the criteria is for these setups, right? And there's a few different setups that you can take, but this is really important. We want to trade the strongest index on an up day and the weakest index on a down day. That means when you're looking at the SPYs, the Qs, and the IWM, that the index that is, let's say on a bullish day, the index that is up the highest percentage becomes your key index. So if the SPY is up 1.5%, the Qs are up 1%, the IWM is up 0.5%, the SPY is the one you're going to be focused on because it has relative strength to the rest of the indexes, and that's the one you want to go into. Today, for example, the day today, the Qs were the strongest or the weakest actually. The weakest one, they had fallen more than the SPY and more than the IWM. That should I say IWM. And so the Qs were the weakest. So if we're going short, which we did today, I did today, it was the Qs that you would trade. But we'll just make sure that when you're looking to trade one of the SPY super systems, look at the indexes and see how they're tracking. See which ones is up or down the most or the least. And if they're all close together, then it doesn't matter. But if you have a standout, then you want to be trading that particular index because it's obviously if it's weaker than the other two indexes, it's likely to fall more. Now you're going to enter. This is one of the criteria for entering. When the current momentum indicator changes from red or yellow to blue or green, this would be for a long. So the current momentum indicator on the compass system goes from red or yellow and turns from blue or green on the 5 minutes. All right, so that's one thing that will give you an indication that potentially I could go long here. If you're going to do short, the current momentum indicator would change from blue or green to yellow or red. All right, so that's telling you that the momentum is now switched from neutral or bullish to the downside or to the bearish side. So you'd be doing it for short. If you're going long an index, any of the indexes, it needs to be up for the day. It needs to be green for the day. Don't go long an index if it's red for the day. You want to go with the trend that index is in. If going short, the index should be down for the day. This is pretty simple. You only want to trade in the direction that the index has done, what the trend is. So that is basically the index's trend, and you want to go with the strongest index, as I said up here. And the stock price should be above the VWAP for long and below the VWAP for short. All right, so don't be trading long if the stock is below the VWAP. Now, if you get good at this, you can actually trade long below the VWAP if the stock's rallying and all the other criteria are there, and you've got quite a bit of room to the VWAP because the VWAP is going to be resistance. So if it gets into that kind of a position, then you can trade it. But I would say for most people just learning to do this or not with a lot of experience, just don't only trade long if the price is above the VWAP. Only trade short if it's below the VWAP. All right, that's a good rule of thumb. It can be broken if everything else being equal. Like if I had the SPY that was up for the day, but it was below the VWAP, but it was still green for the day, which is a little rare, but you can get that. And it had a lot of room to the VWAP to the upside, and all the other criteria were there. The momentum indicator changed from red to green. Then it can be taken that. But again, that is something I would not recommend, especially when you're learning to do this. All right, so we're going to look at the SPY super system. These are the best entry setups that there are. Okay, there's a couple of these. Again, trade the strongest index on an up day and trade the weakest index on a down day. Okay, we just talked about that. If we have an up day and the SPY is up more percentage than anything else, focus on the SPY. If the Qs are up a bigger percentage than the other indexes, focus on the Q. And the IWM, I don't know why this is IWM in here. If the IWM is also bullish and is leading the other indexes, then you would want to do that. Okay, you're going to enter when the current, one of the entries you can take is when the current momentum indicator changes from red or yellow to blue or green, as we've said before, for a long. So that's one of the criteria you can use. Now, there'll be cases where that's not going to occur because you want to be actually taking the trade, and it will the indicator or the momentum indicator will already be blue or already be green before the break takes place, but you can still trade it. But if it changes from red or yellow to blue or green, you want to take particular caution or particular interest in that particular candle, because you know that the momentum is now shifted from bearish to bullish. And again, for short, when the current momentum indicator changes from blue or green to yellow or red, that's who you'd be looking for short. So we can keep an eye on that momentum indicator. Again, if you're going long, the index should be up for the day. If you're going short, it should be down for the day. Again, don't be trading against the index's trend. If you've got a Qs that are down for the day, don't be trading it long. Wait till it sets up for short and then take it short. And again, the stock price should be above the VWAP for long and below the VWAP for short. So that's one of the setups, and we'll be looking at a few setups here in a little while. That's just one of the best entry setups. Now, there are really two high probability trade setups that can be traded. For longs now, you're going to take the strongest bullish index. We've said this several times now. The price should be moving up through the VWAP or bouncing off the VWAP after a pullback. In other words, it pulls back to the VWAP, bounces, then that would be a good entry. And so you take the strongest index, the price moving through the VWAP or bouncing off the VWAP, and the current momentum indicator must be blue or green. All right, and it could be just switched to blue or green, but it could also already have been blue or green. But if it switches to blue or green at the same time and it's bouncing off the VWAP to the upside, that's even better because you're kind of getting in at the beginning of the trend. Now, the other bullish setup you can trade is, again, strongest bullish index, just like on this one here. The price moving up through the 15 EMA or bouncing off the 15 EMA. So instead of using the VWAP as your support or resistance level, you're using the 15 EMA as your support or resistance level. Again, if it's moving up through the EMA or bouncing off the EMA after a pullback. And the current momentum indicator, again, must be blue or green. It could just change to blue or green, but it could also already be blue or green. These are the two best setups that I like. Bouncing off the VWAP or bouncing off the 15 EMA or going up through the VWAP or up through the 15 EMA for longs. The short's exactly the opposite. You're going to trade the weakest index, most bearish index you're going to trade. The price should be moving down through the VWAP or bouncing off the VWAP after a move up. And the current momentum indicator must be yellow or red, or have just switched from blue or green to yellow or red. But it's got to be, you don't want to be trading it short if you don't have a yellow or red momentum indicator, because we want to know that the institutions are selling here. It's really important to know that the institutions are selling. Otherwise, we have a likelihood of have the thing reverse on us. And the bears, another way to do this is the same as the long. For short, you're going to trade the weakest bearish index, and the price should be moving down through the EMA or bouncing off the EMA after a move up to it. All right, and the current momentum indicator must be yellow or red. Again, it could have just turned from green or blue to yellow or red, but it must be yellow or red. So these are the two best setups that I like. I like to trade off the VWAP. I like to trade off the 15 EMA. I found that I've had the best success when I'm coming off the support level. I've got a strong index, and I've got the momentum indicator telling me that the institutions are in there. Right, so you got to look for these. I mean, they just don't happen all the time. Okay, and by the way, this is just intraday trading using the Compass current time frame. This would be for just trading stocks. You're trading stocks, you can do the same kind of thing that we're talking with the indexes. You would just use the momentum indicator changes from red to yellow to blue green for a stock, all right? And the stock price is positive for the day. It's above the VWAP. There should be nowhere near resistance, such as a pivot point, and you're going to have a higher probability of trending days. But you're basically following the same criteria I just laid out, but you're doing it on a stock instead of the index. But we're focusing on indexes here tonight. All right, and again, this is the bearish trade, which is the exact opposite of the bullish trade. Same thing we just talked about. All right, so here's some charts, and these are some trades. And these are going to be on indexes. Okay, now this is a SPY right here. Now this was a trade on the SPY. Now let's take a look at what we've got here. This is the key indicator that we're looking at right here. This is the current time frame momentum indicator here. This tells us whether the institutions are going into this long this trade or not. Now you see down here, you see how it's red. They're short this trade, but the SPY was up for the day. So we can't trade this thing short because the SPY is up for the day. We want to trade long, and what we're waiting for is that VWAP to get broken. Now see how it goes from red to blue right here. Right, so here's one of our criteria. Now we've got a switch of colors from bearish to bullish. Okay, we look at this price and we see the price has popped up to the VWAP, and with a pop out of the box signal. These can be used as well. And then on the next candle right here, this is where you could get in. You notice we've got red to blue, so we've got current momentum is blue, or it's color changed. We've got the stock bouncing up through the VWAP. It's moving up through the VWAP on the SPY, which happened to be the strongest index that day. So this is where you would get in, either right here or right here. And you notice that it switches to green. So you're going to follow this up above the VWAP. And notice it keeps moving up, moving up. Now these trades can be very, very quick trades. You know, you have to look at the trend for the day in the SPY. Has it been choppy? Has it been moving up steadily? Has it been moving down steadily? If it's chopping around, which it obviously has been here because it's green and you notice it pull back, then as soon as you start to lose momentum, now you start to lose momentum here with this wick and this tail, and then you got a red candlestick. You got to be out here. You've got to be out here as this gets ready to move back down again, because a move like this is going to wipe out half of your gains. And so as soon as you start to see losing momentum, you can get out. And a lot of times on a day when it's choppy, what you can do is you can actually set your price target. Let's say you get into a SPY and you're paying $1.50 for the contract. All right, so you can say, okay, I'm going to get out at this at $1.90. I'm going to 40 cents is what I'm looking to take. So you just put a sell order in at $1.90 and watch it. And if it moves up and starts to move back before it gets 1 to 90, lower your sell price and get out. And if it keeps going and you think you make another candle out of it, change your sell price from $1.90 to $2. But this is a bullish SPY super system setup. All right. Notice the VWAP. Notice the color change in the current time frame momentum. Pop out of the box signal even gives you more confidence. You've got a pivot point here that just went through the white line. All right, and it's coming. The 15 EMA is curling up. This is where you would take the trade, and this is a nice long trade here. Probably good for 40 or 50 cents, which is a nice SPY trade. Okay, so that's the setup that we're looking for. That's one of the bullish setups. Remember, the index has to be green. You've got to be above the VWAP or going through the VWAP. You need your current time frame momentum to switch from bearish to bullish or already be bullish. All right, so it doesn't seem that complicated, but this is the kind of setup that you look for. Okay, let's take another look at another one. Now this is the IWM. All right, now the IWM on this particular day was actually red. All right, so this is where we look at the IWM. It did gap up in the morning, but it was still red. So what happened is here that we got a pop out of the box signal to the downside, and here is the VWAP right here. All right, so this would be one that you could take right here if you want to. But now looking at the current time frame, you see the green here. We don't want to go in with a green, but see how it goes to yellow here. So we go from bullish to bearish, and we broke down through the VWAP. So this becomes a decent entry. Now The thing you've got to be careful about on a trade like this is this 15 EMA right here. It's coming right down. This 15 EMA could be considered a support level. So I'd be hesitant to actually take this trade. Now the setup looks good, but you've got support right here. And this yellow line down here is what's called the standard deviation line. So I know I've got a little bit of support down there. So the only way I would trade this particular trade would be as it broke down below the 15 and the VWAP and take it for one candle. And as soon as it hit this, I would be out. And I most likely, because of how close the support is to this particular trade, I probably wouldn't take this trade. So I'm trying to explain the setups and sometimes the reasons for not taking the setups, not taking the trade when you have sort of resistance in the way or support in the way of the trade. Again, you had momentum. It was yellow. We knew they had the institution selling, and you notice they kept selling, but you notice that it was kind of just chopping around here. And again, so that's kind of the setup I would look at, and I would probably be hesitant to take. All right, so that's you know, the indicators are telling you it's okay to take, but your momentum is telling you it's okay to take. Your VWAP is telling you it's okay to take, but your other indicators here, your 15 and the standard deviation line, are kind of telling you to be leery. And you've also got a pivot point down here. So that's a trade that's set up, but I wouldn't take it. All right, so here's the IWM long. All right, so you can see it's above the VWAP here, and we've got green across the board. It's already green. Everything is green here. It's already looks pretty good, but it's just kind of churning sideways. And we're too far away from the VWAP or the 15 right here for me to take this. Even though we get a pop out of the box symbol, I'm too far away from the EMA to enter here. There's too much likelihood that this is going to pull back to the 15. So I'm going to watch this. I'm going to watch this because I like it. It's gone green. I've got a bullish momentum indicator. The institutions are in here buying. Stocks moving sideways, moving sideways. Now it's riding right along. Here's the 15 EMA. It's riding along the 15 EMA. It's above the VWAP. It's riding along, but I'm looking for a break here. Now I get a break right here. Okay, so this is where I would enter it right here. Is I get a pop out of the box symbol off of the 15. Everything's green, looks good, and then I get this yellow one, so I have to be careful. But now it's still above the 15. So even though I got a yellow momentum indicator, I would stay in it because it's still above the 15. That would be my line in the sand right here. So I get in it here, and then I ride it up, and you notice that it keeps on going up here. Now, depending upon how much profit you've got, these candles are getting pretty small. You're gonna be watching it pretty closely when it gets here to see if maybe I should go ahead and take some profits here, or take them here. But it's starting to flatten out. The momentum's being lost. It's getting a little bit away from the 15 EMA. But this is where it becomes very subjective about when you get out of a trade and when you leave a trade. And something like this, depending on what the day was like so far. Yeah, if the IWM was been tracing up all day long and was still in a bullish setup and it's above the 15, I could probably take this for a little bit longer. But I certainly would get out when I get this red candle here. But I probably would be out right here when I start to lose momentum and take the profits I've got. All right, but you notice that what we waited for it to come back to the 15, bounce off the 15, be green on the current time frame momentum, and above this 15 EMA, and then ride it up because we know we've got buying going on with the institutions. All right, so hopefully that clears that particular setup. You can see why this is one I would take. In fact, I did take this. This is one that I would take. All right, so here's the SPY. Now, let's review this now. The SPY was happened to be green for the day here. So I'm looking for a break above a VWAP, right? I'm looking for a break above the VWAP. Here's the VWAP. I'm looking for the current time frame momentum to go from red to blue. Here it is. So I'm going from bearish to bullish as far as the institution is concerned. My momentum has gone blue. I'm breaking through the VWAP. I've got a pop out of the box symbol. It's above the 15 too. Notice the 15 actually turned from red to green. Perfect entry right here. This is a perfect entry. Blue, current time, I got a color change on the current time frame momentum. I got a pop out of the box symbol through the VWAP. All right, now what do I have to concern myself with here? This is what I have to concern myself with. This pivot point right here. So I've got to keep my eye on this pivot point when I get into this trade. It's very important because this is where the resistance is likely to start showing up. So I get into the trade right here. This is perfect entry. I mean, red to blue, breaking the VWAP, pop out of the box symbol. SPY was the strongest index that day. So it's a perfect trade. This is how you would get into this. And then you would kind of watch it. Now notice it just kind of slides sideways here, but it's still sliding along the 15. Then I get another pop out of the box symbol right here. Everything's still blue and green, and knowing that now it's moving up. So now I'm getting up pretty close to the pivot point. I've got to watch very carefully here. You notice it popped right through it here. I doubt that I would have stuck through this candle right here. I doubt that I would have stuck through this candle because I know from here to there, I've got a pretty nice profit in this trade. I'm probably up a point, probably close to $1 on the SPY calls right here. So I probably would have exited right there. If I get in here, I probably would have get out right here. You know, if you want, then you look back and say, oh, I should have stayed in. But see, this is a problem because once it goes through this pivot point, it's likely to come back down again, which it did. So if you held it on here, you definitely got to bail when it gets up through here because it's likely not to keep on going, and you'd have really, really good profits. But this is a nice setup. I mean, this is a perfect setup. Again, strongest index for the day. Pop out of the box symbol as the stock goes through the price goes through the VWAP. All right, it's riding along the 15 as well, so you get the VWAP and the 15 close together as support levels. The indexes have gone from bearish to bullish, so the indexes of the institutions are in here. You buy it right here, it rides up, and again, I would get out probably right about here. You know, because let me tell you, these profits in these indexes can drain away really quickly if you're not careful. One big red candle and you wipe out 2/3 of all the money you just made. So that's a nice setup right there on the SPY. It's one that I take, and that's beautiful right there. And you can see why I can't really call these out. They're too fast. There's too many criteria that you're looking for. They have to fall into place. I look at it, I can see it immediately with my eyes. But you know, if you're not used to doing this, you've got to think. You got to think through it. You got to think: is it the best index of the day? Is it above the VWAP? Is the index gone change color? Is it now bullish? You've got to think about those things. Where is the resistance level? All these things have to go into your calculation when you're going to take a spade on the SPY's Q or IWM. This is important because you're not going to be swinging these things overnight like you can with the stock. If it goes against you in the stock and the stock daily chart is still nice and bullish, you can stay in the trade. You don't have to get out. In these, you've got to take the money. You've got to take the money, and you've got to think of all of those criteria before you get into the trade. It's really important to make sure that it's above the VWAP or above the 15. It's breaking through it. The index of the current trend for momentum has switched from bearish to bullish, or it's been bullish for a while. It doesn't have to change color. This could have been green all the way along here, and this still would be a nice setup. All right, this just gives you more conviction because the fact that the institutions have gone from selling, now they just jumped in and they're starting to buy again based on the current time frame momentum. All right, so that's another nice setup right there. Now here's another SPY trade on the SPY. Now we've got a few things we're looking at here. You see, you notice it's short for the day because see how far below the VWAP it is here. So we're going to trade this. We're going to trade this thing short. That's what we're going to do. Now there's no entries over here for short. Obviously, it's red, but there's nothing moving down. Then it goes to blue, and then it goes to green. So it's bullish, even though it was down for the day. So now we're looking for a change of color, and we're looking for some sort of a break. All right. So what do we get here? We get a break from green to yellow. All right. Institutions just went from bullish to bearish. What's the price look like? Well, look at that. It's right at the 15 EMA. This is the other particular scenario we can use. Right at the 15 EMA, getting ready to break down. It breaks down here, and then with a pop out of the box symbol, it breaks down here. Perfect entry. This is a perfect entry for a short on the SPY right here. As long as the stock stays below the 15, you're golden on this thing. And as it breaks down here, you entered on the current time frame momentum went yellow. Institutions went from buying to selling. It's breaking below the VWAP. You got a below the 15. You've got a pop out of the box symbol. Beautiful entry. Now it tracks along a little bit and comes back up to the 15. Did not break down below the 15. So this you would not want to exit here. You have to be careful because you've got your. That's why you want to get into these things as close to the support level or resistance level as you can. And the 15 becomes resistance. So this allows you to, if you get in here, this allows you to stay in the trade, even though it goes against you a little bit right here, and then it rolls over and starts to head down, stays below the 15, and then you get the big flush. You get a big flush, boom, 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 you're out. I mean, you're going to be watching this, and you're going to be out as it pulls away from the 15. It gets a long way away from the 15, and then then it tries to recover. But you've made a beautiful amount of money in this trade right here. This is a really nice move that that would have been perfect for you. Again, red and green to yellow, coming off the 15. The SPY is down for the day. It's the weakest index of the day. You can enter right there, or certainly right there. You don't want to wait past there. But right here, you can get it as it breaks below the 15. You don't have to wait for the pop out of the box symbol. Signal. And then it just moves down. Now, again, you've got to watch this out. You got to watch your 15 here. That's why getting in close to the 15 is so important, because as it breaks below the 15, you want it to stay below the 15, which it did. If you get shaken out here, you'd be kicking yourself, because look what happened 5 candles later. All right, so this is another beautiful short setup. Again, current time frame momentum, green to yellow, right as it breaks below the 15. Weak index, weakest of the day. It was down for the day that day. This isn't true. This is just that's today, but that was weak for that day. So that's the scenario for a SPY short right there. All right, that's pretty nice. Now we've got to switch over to a SPY long here. Now we're saying that the SPY is long for the day. We're going to go long. It's up for the day, but we're looking for an entry that meets that criteria. Well, it's below the VWAP and it's pretty close to the VWAP. I can't touch it here. I can't touch it here. It's too close to the VWAP. I got to wait for it to go through. Even though the current time frame momentum has already switched from red to blue to green. I know that there's buying coming here, but the price has not gone above the VWAP. Now, it breaks through the VWAP right here on a pop out of the box symbol. Boom, this is where you go in, right here. All right, you're still green. That's why I say it doesn't have to change color. It could already be green. Pops out right here. You grab this right here. It's popped above the VWAP. Your VWAP becomes your line in the sand. You watch this stock move up, and it just keeps moving up, moving up, moving up, moving up, moving up. And then you start getting a couple of flat candles here. I'd probably be out right here. Even though you get another green candle, I would probably be out right here. Now, it's still green, but we are starting to get a little bit away from the VWAP. So this is where I would have taken profits in this particular trade right here, probably right here in this first red candle, because I got a nice profit here. You know, I've got a nice profit here. So this is another bullish setup. And you see, again, you've got the current time frame momentum is the institutions are buying. The stock is bullish, is green for the day. It's coming up through the VWAP after pulling back, and you get a pop out of the box signal. It's perfect. Perfect entry. Make 4 or 5 candles. You're out. You take your money, and you look on for the next trade. All right. So, and you have to look for these setups. You know, it takes practice. It takes time. If you're doing this, you can just watch the indexes. Look at your indexes around 10 o'clock. See which index is outperforming to the upside or the downside. Look at the Qs, the SPY, and the IWM, and see which one is outperforming. If they're all close to the same, then it doesn't matter. You can pick one that has the best setup. But this was a nice setup, and I hope this is kind of clear. I hope you can see how beautiful this is as it breaks above this VWAP, and how important this VWAP is. I mean, you theoretically could take it as it breaks above the 15, but I'm not going to do that when it's going to run right into the VWAP right here. There's not enough room to the upside for me. I don't know that it's going to get through here. It could have gone to the VWAP and pulled back down again. All right, so that's a setup. So those are the setups I've got. Let me go over to just today's live chart just for a minute. All right, so this is today's live chart here. All right, that's the NQ tonight. NQ tonight, by the way, in case you're interested, is up 170 points. I don't know what the heck's going on, but that's a big run up in the Qs. And anybody in the room probably has that strangle on the Qs for tomorrow morning. So this is going to be pretty interesting. All right, so let's go back to the SPY today and the Qs today. All right, so the SPY today actually traded this thing. I can't remember what time. I traded the SPY, which was weak today, by the way. I took it short. Yeah, I took it short right here. Now, everything's red. You can see the current time frame momentum is red here. And what I was looking for is I was looking for breakdown. I had already gotten quite away from the VWAP, but see this nice break right here off the 15 as it break down off the 15. I could have taken it here, but I took it here and I wrote it down. And this, you know, it wasn't a big trade for me, but I made 40 cents on this trade as it broke down here and rode down here. And then I get out. As soon as it started to bounce, I get out. I didn't hang around. It kind of went sideways from there. So that was a pretty nice trade. See, this is a thing. The SPY was bearish today. You don't really want to trade this here. Now, if you're good at this, you could do it. But this is, you notice this blue, red, blue, red, blue, red. That's really difficult to try to trade. And if you tried to go long here, even though it was bullish, you're gonna run into the pivot point up here. I mean the VWAP right up here. So I wouldn't be trading this. I wouldn't be trading it long. I'd be trading it short. Now, there was a question today on taking a short right here. See, this is a good setup because it's breaking below the 15, all right? And you get a pop out of the box single. We went from green to yellow. So this is a decent setup. But the problem with this particular setup today was the SPY was not the weakest index. The Q was the weakest index. Okay, now this is 1445, all right? Let's go back to the Qs at the same time. Here's the Qs at the same time, right here. All right, you see the difference here now. It's breaking below the 15 with a pop out of the box symbol. But notice that for 5 candles, it went down. All right, so if you get in here, you actually made money on this trade. All right, you made money on this trade. But the SPY, because it was not the strongest, the weakest index, you didn't make money on the trade because at this candle, it just kind of went sideways. So you lose, plus you had the pivot point here, I mean the standard deviation line here. But by trading the Qs instead of the SPY on this particular candle, you would have made money on the trade as opposed to breaking even or losing money on the trade. So that's really important why you want to trade this, because there was a big difference today between the SPYs and the Qs. The SPY was, at the time, the SPY was down about 7.7%, and the Qs were down 1.5%. Big pull down in the SPY for the day, way more than the Qs. Qs were down way more than the SPY. So that's the difference here, and you can see this. Even though this didn't work on the SPY, it would have worked on the Qs. And the set, there's no criticism here as far as taking this. This is a pretty good setup. The criticism is you took the wrong index if you're trading it here like that. So and it was getting close to the late in the day, but and the Qs were down, and SPY was down. It could have kept going down. It could have easily kept going down, but it didn't. But again, notice the difference here, and notice the Qs at the same time. So this is a good example of why I say to look at the indexes and trade the weakest one to the short side, the strongest one if you're going long. And this shows it a great example of why, if you had done that, this trade would have been profitable. And it's really important, because you notice this thing went from right from here went green to yellow. So you also got you get the breakdown here in the color from green to yellow at 1445. I didn't even look to see what the SPY looked like at that point in time. I'm sure it was also switched as well. The Qs actually switched one candle later. But that's the difference, and that's why the criteria are so important to look at your indexes and trade only the strongest or the weakest that day. All right, so that's what I'm looking at here, as far as these trades are concerned. Oops, let me skip down. Let's just recap what we're looking at. All right, let's just recap. We're going to the indexes, SPYs, Qs, IWM, looking for a color change or a bullish or bearish color on the current. The critical indicator we're using, the VWAP is critical, the 15 EMA is critical, the pivot point is also very critical as far as being support or resistance to block you from being able to make money in the trade. All right, so we'll skip that path. Here's our setup. Trade the strongest index on an up day and the weakest index on a down day. Again, this would have made a big difference today on that last trade. Qs would have made money, the SPYs did not. All right, and again, the indicator changing from colors, from bearish to bullish or bullish to bearish. That's another sign, but it could already have been set up like that. And again, the index should be up for the day if you're going long, should be down for the day if you're going short, and obviously the VWAP is very critical. All right, so that, and there's our setups using the VWAP and using the 15 EMA. Those are the setups that we take. Those are the two best I think that there are. And oops, yeah, there's the two high setups using the VWAP or using the 15 EMA. Strongest index, price moving up through the VWAP or bouncing off the VWAP, current momentum indicator must be blue or green, and if it's just changed to it, it's even better. Or the 15 EMA, right? So that's what we just looked at. All those trades are either off the 15 EMA or off the VWAP, every single one. All right, so those are the best ones. The shorts are exactly the opposite, and I hope that helps clear this up a little. I try to be as inclusive as I can. I don't want to make it too complicated, but it's not that complicated. Once you train your eye to look for these particular criteria, keep those criteria. I mean, write the criteria down if you want to, and look at those criteria on the indexes as you look at them. Look for that particular situation to develop. Okay, it's really important. And you have to keep the market in mind. What's the overall market doing that day? Chopping around, trending. If you got a trending bullish SPY and it pulls back to the VWAP and then bounces, but the day's been trending up, a lot of times you can stay in the trade longer. You can give it a little bit more you can have more flexibility to stay in the trade. Right? So there they are. There's one right there. It's a nice one. Here's one I wouldn't have taken because of the proximity of the particular pivot points. This was a nice one here. Again, you can see we enter here as we break above the 15 EMA. Another one right here that you're breaking below the VWAP, right there, boom, or above the VWAP. Depends on whether it was green or blue for the day. If it's green here, you're going to run up to the pivot point as it comes through the VWAP, and that's what I took this one. Notice it went to blue here, and then green, and it's coming off the 15 and the VWAP. It's a nice little trade right there. All right, so those are the trades. That's the setup. I hope this helps. I mean, I really do. This is listen. This is not the end all to trading. But a lot of people like to trade intraday trades. They like to take short trades. Maybe they can only be watching the market for a couple hours. So you really can't stay in there and watch a trade that's going to be a longer term trade all day or overnight. So you look for these trades as an intraday trade for when pick one up, and you stay in it. Most of the time, you're not going to be in these things more than a half an hour. I mean, that's probably generally the longest you're going to be in most of these trades. So that's nice for people who are just coming into the room for just a short period of time. Again, I can tell you when I see the setup. There's no way I'm going to be able to post these things. There's no way I'm going to be able to do too much call outs. I can tell you what I did. The problem is when I tell you what I'm doing, I can tell you here's set up. I'm going to take it, but if I tell you what strike I'm taking, how much I'm paying for it, the thing's already moved. So I'll just tell you when I see the setup taking place. That's all I can do because I'm looking at a lot of other trades as well at the time. So that's why it's really important for each individual trader, if they want to trade intraday on the Qs, the SPY, or the IWM, to be able to internalize these criteria that we just talked about, and like I say, write down it's not that many. Write down the criteria: current time frame momentum, right? VWAP, 15 EMA, strongest index of the day, weakest index of the day. That's it. That's what you got to use. And they've got to align for you. All right. So that is that's the video. It took me a while to put it together. I know it didn't take that long to talk about, but I do these things automatically. So I have to go through the process of writing down what I know and showing and laying it out. I don't even think about these things when I see them. I know exactly what I'm looking for, but I needed to put it in writing to show you. So again, I hope you appreciate this, or I hope you learn from this. I have people request it. I think it's something that everybody can use if they want to. Again, you've got to be nimble here. You've got to be nimble on these things. These things can come and go pretty fast. Just remember you need to have. You can't be under PDT. The rules as far as your accounts are concerned is important. So just be aware of that. And then again, try to be nimble. look for these setups, trade them on paper if you want, you know, try them out and see how they work. But I know I've got a bunch of people trading these things now, and I'm trying to let everybody, all the members, take advantage of it, because you don't have to listen when you're trading the SPYs, the Qs, or the IWM. You don't have to worry about liquidity. You don't have to worry about open interest. There's a crap load of liquidity in all these things. You're not going to have to worry about too many people trading these. All right. So again, have a great day. Good luck. We'll see everybody in the room, and I hope you enjoyed this. If you have any questions on it, just give me a shout out in the room. All right. Talk to you later.